Hi everyone, my name is Vendik and I welcome you to the channel. Okay, today we're gonna cover basics of candlesticks. All right, so I think there is a little um, people tend not to understand how candle is formed. All right, so I just want to throw light on how candle is formed, the basics of the candle, and then we'll try and cover how we can use this in our own advantage. Okay, so without further ado, let's get to the charts. Okay, let me explain this in details. Okay, so let's pick this as an example. All right, let's just try as much as possible to be fast with this. This is a candlestick. All right, so every chart has a candle. Okay, and every candle has opening, a close, and a wick. All right, so every candle has a opening, a close, and a wick. So these are three things you need to put into consideration. So for example, this example here is a bearish candle. So a bearish candle will definitely have uh, a opening. It will have an opening. It will have a wick. Okay, this is a wick here, and then we have a close of the day, and then probably we have another week here. So these are things you should put into consideration. All right, these are things you should put into consideration, right? So every candle will always have an opening, a close, and then the wick. All right, so if let's assume this is a daily time frame, okay, and this candle here represents 1 day. All right, so if this represents 1 day, okay, when the market opens, we will have something like this. We will have some form of accommodation. Okay, then we expand towards the upside. We expand towards the upside, and then we break down. We break down like something like this. Okay, I'm not too good with my drawing, and then we later came back and then form the close of the day. All right, so this is exactly what will happen in a lower time frame. Okay, so towards the opening part, you will have a form of consolidation towards this opening. All right, you have a form of a consolidation towards this opening, and then you have manipulation, and then you will expand. Okay, you will expand for the day. You will expand for the day, and then you will close. Okay, you will have a closing range. So this is what really happens in the market every day. So you open, okay, market goes up. So if market goes up and come back, okay, that's why we create this week. All right, that's why we create this week that we have here, and the market expand down, all right, and come back for a close. So that's since it came back to the range again, that is why we have another week. Okay, so typically this is how candle is formed. Okay, so every candle that form in the market always go through this process. So you see some candle that doesn't have wick, that simply means it did not create a low for the day. All right, maybe open and close at the same point. So this is exactly how candle is formed. Okay, let's look at candle flip. All right, so if you are looking at that candle when it was formed, okay, if you're looking at that candle when it was formed, when the market opened, the candle will just be going up and down. Okay, create the high of the day. Okay, if it was bearish candle, it will create the low of the day, and then eventually um, fall back. Okay, so this is what we call candle flip. All right, it changes its direction from the anticipating direction. Okay, it changes direction. So if you are just looking at a particular candle, the movement you will be seeing will be something like this. So when market opens, it creates the high of the day, and then eventually flip down. Okay, and then drop. That is how this week is being formed. Okay, That's how this week is being formed. So in this candle, you have the opening of the day, we have a week of the day, and then this is the body of the day. Probably we might have a week. Okay, we might have another week. So typically, this is how market is being, okay, market is being formed. Okay, so let's check for a live example. Okay, I'll try as much as possible to make this tutorial very simple because it's just candlestick. So each of the candle, this is 4 hours, maybe. Well, let me just make it daily candle. All right. Let me just make it daily candle. So you see, you definitely will see. Okay, this is a live chart. Okay, if you want to take that as an example, we have opening of the day. This is the opening of the day. We have an opening of the day, the week of the day, the close of the day. Then we have another week here. So that's for this particular candle. Okay, that's for this particular candle here. Okay, we have an opening. All right, we have a week, we have a close of the day, and we have another week. So that is it. So that's how candle is formed every day. All right, this was an opening of the day. Okay, this was another opening of the day. We have a week of the day, we have a close of the day, and that is how every candle is formed. So um, if you really know how this thing forms, so if every candle form this pattern, this should give you an edge in the market on how it works. So I believe this explains how candle is being formed and then the ranges that every candle create. Candle always have it the same pattern. Okay, if you go down to a smaller time frame, you have something like this. We have a week, it will trade up, later expand down, all right, and we have the close of the day. So that's typically how market that's typically how candlestick is being formed. So you need to really understand this, okay, and then use it for your own advantage. So I believe this helped you in your trading career. So don't forget to do the YouTube business. You like, share, and subscribe. All right, and I will see you in the next episode. Thank you very much.